What if I told you the next interest rate hike wasn't decided by a room of bankers, but by a machine that never sleeps? Imagine a world where the dials of the global economy are turned not by a committee in Washington or London, but by a silent, cold processor buried deep in a server farm. For decades, we have relied on humans to steer the ship. These are experts. They are economists with degrees from the best universities on Earth. But they share one fatal flaw. They are slow. They look at data that is already months old. They react to the past while the future is already crashing into us. The global economy is now a digital beast. It moves at the speed of light. Meanwhile, our central banks are operating on a schedule designed for the 19th century. Every time they meet, they are essentially driving a car by looking through the rearview mirror. This is why inflation catches us by surprise. It is why recessions feel like sudden ambushes. The tools are broken, the system is lagging, and the people in charge are effectively flying blind. But something has changed in the shadows of the financial sector. Big institutions are now using platforms like Deep Macro. These are not your average spreadsheets. They are artificial intelligence engines that ingest billions of data points every single second. They track credit card swipes. They monitor shipping manifests. They analyze satellite imagery of parking lots to count cars. They see the world in real time. While a human economist is still waiting for a government report to be printed, the machine has already calculated the price of bread in every city on the planet. This is the first mini payoff. The game is no longer about who has the best theory. It is about who has the fastest sensor. And the machines are winning. Think about the sheer volume of data involved. Every click, every trade, every logistical shift across the globe flows into these models. They don't just see the inflation. They feel the pulse of the market before the market even knows it is sick. Humans work in cycles of months. AI works in cycles of milliseconds. When the machine sees a spike in shipping costs, it predicts an inflationary wave 60 days before it shows up on your grocery bill. This brings us to a terrifying question. If the machine knows the future, why are we still letting humans press the buttons? Some central banks are already flirting with this. They are running ghost simulations. They watch what the AI suggests and then compare it to what the human committee decides. The result is often embarrassing. The AI is consistently more accurate. It is less prone to political pressure. It doesn't care about elections. It does not have a public reputation to protect. It is just math, and math is notoriously indifferent to your personal financial struggles. But here is where the black box dilemma kicks in. If an algorithm causes a massive market crash, who do we blame? You cannot put a line of code on trial. You cannot fire an autonomous model for poor performance. If we hand over the keys to our economy to an AI, we are essentially signing a contract with a black box that we don't fully understand. We might get more stability. We might get lower inflation. But we lose the ability to ask why. We lose the human element of mercy when things go wrong. We are standing at a crossroads. On one side, we have the old guard, clinging to their committees and their outdated reports. On the other side, we have a decentralized, algorithmic future. A future where the interest rate is a fluid, living number that adjusts in real time based on the health of the entire global network. Cryptocurrency enthusiasts have been screaming about this for years. They want decentralized finance because they know the current system is fragile. They want code to be the law. But an algorithmic central bank is a different beast entirely. It is not just about the money. It is about the control of the entire economic cycle. The transition is happening right now. It is quiet. It is digital. And it is inevitable. We are moving toward a world where your mortgage rate, your savings yield, and the value of your currency are determined by an intelligence that does not eat, sleep, or feel fear. It just optimizes. Some call this progress. Others call it the end of human agency in economics. The truth is likely somewhere in the middle. We are building a machine that can save us from our own slow, reactive nature. But in doing so, we might be creating a master that we can no longer control. The next time you see a headline about an interest rate hike, ask yourself if a human actually sat in a chair and made that choice. Or if they were simply the face on the screen, reading out a decision that was made by a processor in a basement 3 time zones away. The shift is already here. We are just the last ones to notice. Like and subscribe for more. See you in the next one.